off yesterday. Man, what a morning so far in the world, in the market. Bit of a head scratcher. Not going to lie, bit of a head scratcher. Things are a little bit confusing out there. The futures markets are, they're down, but they're not down nearly as much as the stocks are. So we're going to talk about that discrepancy today. We're going to talk about the latest developments in the never-ending Russia-Ukraine saga. That's going to lead the show. That's the story of the day today. Is that arena, and then the reaction to what's going on in that arena. So Joel Kulina is our guest today from Wedbush Securities. It is great to see you all in the chat. Good morning, everyone. Hit that like button for me. And I got Joel here. I got Dennis here. It's going to be a wild day. Let's get started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, Joel. Good morning. I hope you saved up. You have your energy, and Dennis. Good morning to you as well. I hope the day off gave you an extra boost here because we're gonna need it because we got a lot going on this morning. So, Joel, recap.
We sure do. Let's just let's talk about the most pressing issue of the weekend, and that has to be what happened at the Michigan-Wisconsin basketball game.
Right. Yes.
Holy mackerel.
Definitely
We could spend an hour talking about that. I'm going to give you the net change, and the net change is down 6 handles at 43.50 was our close. We're at 37.50. Not going to give you a high and a low. I'm just going to say this is a really important day for the market, and if somehow we can only end up down 5 handles or we end up green on the session, I think that is going to be a major victory for the market. And I'm just going to leave it at that. That close was 43.50. Crude getting a boost here, up 250, 92.72. Not a high of the move. Gold, that's up. Let's call that flat at 1900. We got silver. That's up 11 cents at 24.11. Bitcoin. That got hit. That's down 23.65 at 37.580. That's from the Friday close. Ethereum's going the same way. That's down 191 at 25.95. But we're going to bring in Triple D here. And Triple D, there's not often where I get on and Mitch gets on and Spencer gets on and you get on and we kind of all say the same thing. Like, what the hell are the futures doing up here? I'm looking at the stocks.
Yeah, no, I know.
And I'm just saying to myself, there's going to be some reconnection here. I just wish I knew which way.
We got stuff that's absolutely hammered. And again, some of these have just traded and they haven't came back from when the futures rallied. Some had 4 a.m. trades that were way down.
Correct.
So you can't really look at where the stock is last. You kind of get a feel for where the bids and the offers are, but you just bring up, pretty much any stock. And you're seeing stocks down 0.5%, 1%, some 2%, some 3%. Pretty much across the board. Now, what is trading higher? There's a few things. Non-tech components of the QQQs, because of the QQQs, only going to be down 0.53%, and you're hitting, everything else down more. You got to buy something. So that whole list that I've talked about before, like there's Starbucks, WBA, Mondelez, CSX, they're all green. So they're trying to buy those stocks to help out a little bit here in the pre-market. Energy stocks are very, very strong. Retail is going to be strong. Those are going to be 2 sectors that are going to help out. Retail, mainly, you got the Macy's numbers, which we'll get to in a second. They were good. So that's going to help. But overall here, you have a lot of stocks that are very weak here this morning too. So when we went green there about 20 minutes ago, I even tweeted out, I was like, I don't even get that at all, because I'm seeing stocks, a lot of stocks down over 1%. Some, like I said, 2-3%. And you got futures trying to go green. This didn't make a hell of a lot of sense to me.
Even if you put the stocks aside for a second, just talking about the futures and the rally we've had all morning, that in itself doesn't
really any of it make sense.
That doesn't make sense. Nothing makes sense.
There was nothing. So, okay, in case you've been on a desert island and you haven't heard all of the stuff, Putin with his hour-and-a-half conference call basically that felt to me, just to sum it up, but it felt to me like the preliminary like groundwork to invade. And that's pretty much how I kind of, felt, and I think that's a lot of what other people felt too, listening to him. It wasn't like we're coming in and invading here tomorrow, but there was so many accusations. There was every excuse in the world leading up to that. Hey, we're going to have to do something about this.
Yeah.
So it sounds to me like he's not scared of NATO. It sounds to me like he's not scared of repercussions from, other countries. It sounds to me like he's going in and he's going to do what he wants to do.
Yeah, I mean, I was kind of getting set to at least I was thinking ahead to this morning yesterday, and I was kind of getting ready to talk about how nothing of consequence really happened over the weekend until like 2:00, 2:30 yesterday, when I see, oh my gosh, Putin just told the Russian army to go into Ukraine.
Yeah.
What? And so now, in response to that, you saw the news this morning now that Germany has halted the certification of that pipeline that's sort of at the center of all this, the Nord Stream 2 pipeline. The UK has announced some economic sanctions already. So the gears of war are turning here now.
They are.
Yeah, especially over the last 16 hours.
Yeah, and you are getting some of the defense stocks that are a bit up here. Lockheed Martin, full disclosure, I do have a trade on in that right now. RTX is bit up. Full disclosure, I got a trade on that one too. I trade on everything. General Dynamics, NOC, all getting bit up this morning. So you're seeing that. Oil, obviously, the first thing everybody thinks about. It's bit up enormously here this morning. I think we're getting close to the highs. Are we not on oil, Joel?
Actually, I was looking at that. Basis the futures, we know they're always rolling those
Yeah.
contracts. We did make a new high for the move there at $95, but
Okay.
I think what just going back and backtracking a little bit. How about the rally off the 6 p.m. open on Sunday?
Let's talk about that. Let's talk about that.
Because everything's fine. We're gonna meet. I'm like,
Yeah, I
oh
know,
man,
that's true
you
too.
believe
Can you
that?
see that on the charts?
Yeah.
Scroll back a little bit to see
Yeah,
that.
look at the 60-minute here, and you can see it. I'll make it a little bit bigger
Yeah.
because this is actually going to be included in the day's range. I mean, believe it or not,
Yeah,
this
because you
is
got
it.
2
This is
days
this
of futures
right
trading
there.
that
Yeah,
are going to
right
be in
there.
this range.
43.91. We got
Wicked rally.
43.91 and a quarter.
And that's what this market has been pretty much the whole way down. It's been death by 1,000 cuts for a lot of stocks, but there's been wicked rallies. So you think, oh, I'm just shorting stocks making money. It's not been easy for the shorts either. There's these wicked little squeezes that continue to happen on a continuous basis. And that's another one. So you think, okay, well, they're meeting. There's a headline driving it up, and then there is no meeting, obviously, and then it tanks back down. But again, what we were saying too, there's some markets that you can trade technically. Oh, this is setting up well. Oh, this looks good. And then there's some markets that are headline driven, and we are in the 100% headline driven market here right now.
Yeah.
So as much as you can like whatever technical setup, if something happens, another headline breaks, which we are getting headlines almost continuously on Ukraine here right now, it's going to drive futures prices. Algos are reading the headlines and they're doing it. I know traders, a lot of them say just ignore all the headlines. And I've said all along, as an active day trader, if you're a swing trader, long-term investor, even if you're a long-term investor, sure, ignore the headlines. You're a long-term person, maybe you're going to get shaken out of stuff. You can probably ignore headlines. If you're a trader in any capacity, you've got to be paying attention to the headlines, because I tell you, there's a lot of money made on the headlines and being quick on it, because the institutions take a long time to respond to headlines. They don't respond on a dime, and it's institutions that really drive flow. The algos do, and sometimes they overshoot, and sometimes, you're going to get chopped up trading headlines. But you've got to be aware that we're in a headline-driven market, and I don't care what the hell the chart looks like. If the next, headline comes out and, okay, we got full-on invasion going here, market's probably going down. Nothing to do with the technicals.
Yeah.
And this is like more so than the than with the trade war. Trade war.
Well, that was a headline-driven market as well. I mean, and we kept getting, okay, that went on for like a year and a half. And is this going to go on for that long? I don't think so. I think like mobilizing troops, I think like it feels like, to me, my opinion, I don't know what's in Putin's head, but doesn't it feel like kind of invasion is imminent here? Doesn't it feel like that to you? To you guys?
They're kind of the way they're. I mean, there's different ways. There's already
What?
like factions in. I mean, there's already factions in Ukraine that are already doing things, right? The separatists. So they're basically already doing things. I don't know what your actual definition is going to be. I mean, as far as the Soviet troops like actually crossing the lines,
Yeah,
but
that's what I'm.
yeah, they're
That's what my definition of invasion
yeah.
would be.
You would think so, wouldn't you? So
It kind of feels like that. I mean, but the market doesn't know. I mean, let's look here. We're massively oversold on a lot of indices. So I mean, especially we talked about some of those growth names. So we are oversold. So it's not surprising you're going to get these dead cat bounces. The question is, are you buying these bounces? I would be buying the dips and selling the rips. I think it's the same thing. You got to keep playing it the same way we've been playing it for the last, I feel like for the last year. It's chop. It's a choppy market. So you're buying dips and selling rips, or shorting rips and buying dips, not doing the opposite. I think you've got to continue to do that on everything. I think you're booking gains when you've got them. I mean, if you're a long-term investor, sure, do whatever you want to do. You want to stick and you've got a story and you're going to hold it for the next 10 years. It's a completely different animal. But a lot of people listening to this show are traders. And if you're a trader and you're sitting on and all of a sudden you get 10% lift in one of your stocks, just because, there's something happened with Ukraine or this or just a technical bounce, I think you use that opportunity to sell it. You got to be booking the gains as you're going here, because if you don't, then they turn around and they go straight back down. I mean, case in point, on my Square position, here I stuck, a small position of Square in the long-term portfolio at 104. It bounced to 129, came all the way back down to 104, bounced again up to like 117, 118. But long-term, I'm trying to say, okay, I'm trying not to look at it. I want a little position in Square. Now it's breaking down. Now it's $94. And now it's through the 100 technical support. And it's like, it looks like hell. So twice, I was up 25% in that thing, and I was up another 10% in the thing. And now I'm down in it. So it makes me just want to trade my long-term portfolio. I'm trying not to do that because I wanted that. We know I have a lot of cash in my long-term portfolio. I'm trying to take a longer-term approach to it, but it's hard because I tell you, as a trader, I'd be selling the hell out of a 20% bounce in 3 days. And that's what we got if we go back on the Square from January 28th to January 31st, when it bounced from 101 all the way up to 130. These are 25% in a day. You got to take the gains. So maybe you even got to do in the long-term account when you get them that quickly. And then, but it's hard. I don't want to start saying everybody should be trading their long-term account. I probably do worse. To Warren Buffett, what he says, the best thing he does, and is when he's doing nothing. So, I mean, I try to take that approach to a certain extent, but the trader in me gets me sometimes. And, I do find myself trading my long-term account the odd time. I was like, what are you doing? This is supposed to be 20, 5, 10, 15, 20-year time horizon. Why are you trading out of that? But as a trader, whatever's in your trading account, you're getting 10, 15, 20% bounces and stuff, you get out. So this is a nice overnight bounce.
But that strategy would not have been a good strategy in like 21, when
in
the market
2020, in 2021 it was good. In 2020, you're mad.
So
every time you bought something or you sold something in 2020, you're mad 2 days later. Every time you buy something in 2022, you're mad 2 days later because it seems like eventually they just make new lows. It's definitely the market you don't need to chase in. So you're like, oh, I missed it. Oh, I missed it. This market is giving you chance after chance after chance after chance, and it's giving it for a reason because the bottom is not in. ARKK, Kathy Wood on CNBC 2 days ago.
I had a feeling you were going to come on.
2 days ago, she announces and proclaims, she said it in the interview, she believes that the bottom is in for ARKK, and basically implying that that her ETF is probably never going to trade lower than 64.35 ever again. 2 days later, she's wrong on that. 2 days, 24 hours, not even 2 days, 24 hours after that interview, it falls 10%. Basically 10% from where she was talking about it to make a new low on the move. That's incredible that it went down 10% just that quickly. And ARKK is obviously making new lows here today. Nobody knows anything, the bottom line, not even Kathy Wood. She doesn't know. Nobody knows when her ETF's going to bottom. Nobody knows when this market is going to bottom. So, even though I get that question sent to me every single day, is this the bottom? Is this the bottom? Not once. Sometimes I get it 10 times a day.
Let me know when
nobody knows when the bottom's going to be.
Let me know when you stop getting them.
Because that's the bottom. Yeah. when I get the day that nobody asked me, was that the bottom? Then that's the bottom. So I guess we just gotta, wait for that day. One day I'll get that. Hey, I better notice it though. I probably won't notice it that day then. So I don't know what to say about this market, though. All I can say is it's going to be choppy. There's going to be a lot of volatility, and you don't want to be chasing in this market. Chasing is a recipe to lose a lot of money in this market.
Yeah. I mean, I agree. I have nothing more to add because I agree with everything that you guys have been saying all morning. The one thing that I do want to actually chime in here is we've talked about, where to look as far as the whole Russia conflict is concerned. You look at the overall market. You look at crude oil, obviously.
Yeah.
I would also point everyone's attention to the small number of Russian-based companies that trade on U.S. exchanges, because there are a handful of them. So Yandex, right? YNDX is probably your big one that's trading down this morning. Anything with Russia exposure is going to trade.
Dead
It's going
today.
to be down today. So
Yeah.
YNDX,
Yeah.
QIWI, Kiwi, that's another one.
I'm going to write these down, actually. This
Yeah.
is good to know.
So
QIWI.
YNDX,
Yeah.
QIWI. I don't know what that company does. I just know it's a thing. MTL, Mary Taco Lima is another one.
Okay.
Lower price stock, low volume. And MBT, Mary Bravo Tango. These are all Russian companies that trade on U.S. exchanges.
Is there only 4?
I'm sure there are more. I don't have a complete list.
Okay.
Oh,
Maybe we can get a whole list
thank
if
you.
you want to look at today.
Wait a minute. Thank you, Easy Mike. I didn't even realize there was a Russia ETF.
RSX.
There you go. there's
RSX.
Okay. Well, there's several actually. There's here. So
The double bull.
let's go look at what's in like the iShares Russia. Here, I'm gonna
RSX.
back on here.
Do it. Show us.
Well, I'm on the iShares website here. Oh, it's all all right. Not all of these trade in the U.S., so it's kind of a tricky one. You kind of got to look.
Yeah.
I just went to ERUS as the symbol, and you can just go look see. So anyway, the point being, anything with exposure to Russia is going to trade down today. That's another area that you can also look to. So okay, do you want to move on to? We have some earnings this morning.
We do. I just want to finish up thoughts here, because obviously the whole driver earnings are going to take a back seat. And we have some big names this week reporting. And we obviously had Home Depot and Macy's this morning as well. But you've got to be aware that what is really the driver here is going to be the headlines coming from Ukraine. Interest rates are still there. That's still going to be a driver as well. But right now, the whole world has got their eyes on Ukraine, and the market is watching this as well. So you've got to be aware that even though your company reports a killer quarter, it's like, okay, well, what is it? First of all, is it an energy stock? Well, that's going to be moving, or is it, what sector is it in? How's Ukraine impact that business? Does war impact that business directly? But it impacts just all stocks right now, because stocks are all moving together. Correlations are all coming closer together. When the VIX goes up, correlations go up. But there are individual stories that are doing really well. But we should start with Home Depot, because
before we
do it,
just one thing.
Yep.
The stocks have been, just overall, good earnings or bad earnings. Look at Google. A lot of it's a market environment. They announced great earnings, a 20-for-1, whatever stock split. So, it's been the market environment too. But if you seems like good earnings have not really been rewarded, and bad earnings have just been annihilated. Of course,
it's been a horrible market for the longs.
Yeah,
it's been an absolutely horrible market for the bulls, unless you're in energy. It's been a horrible market for the bulls for the last, in 2022, really. Every single rally that, for in the most part, unless, like I said, unless you're an energy stock, it seems like every single rally eventually gets sold, and every single sell-off off earnings doesn't get bought. So it's just been horrible. To your point, Google did everything right in that quarter. Now it's a stock split. It's given it all back and more, because we're of the overall macro environment. So it's a tough market to be just a long only trader. And if you're a long only, you're probably really struggling in 2022. That's why we've always said you got to be able to go both ways. If you're going to do this as a business, you've got to be able to go both ways in this market, meaning you got to be able to short stocks too. So if you think you're going to go and open a Robinhood account and make a living as a day trader, it's difficult because I don't even do they allow you to short stocks? I think Robinhood still doesn't allow you to short stocks.
No,
I'm not sure. I don't have a Robinhood account,
No,
so maybe
they
somebody
do.
can verify that. But it's difficult when you're handcuffed and you can't do, you can't hedge yourself even for the most part. Not very well.
They offer margin.
You could buy those long, inverse funds and stuff, and that's one way, I guess, to get around it. But it's difficult. So, I trade hedged. What does that mean? I'm like market neutral. So equal longs, equal shorts.
Justin JTV says they don't. All right.
I don't think they do. I don't think Robinhood allows you short stocks. I guess they can buy the double ones.
I mean, you can do options, and you can do the inverse ones
options
that you just.
Yeah.
All right.
That's your only way on Robinhood.
Huh.
So it's difficult. So, I mean, as a business, it's hard to be, I would say it's very difficult to be, make a career out of being a day trader on Robinhood. I think if you get to that level where you want to do this as a business, as a career, like quit your job, you've got to move on to a platform that allows you to do everything. But, there's obviously the inverse ETF, one way to get around it, I guess. So, but I trade hedged. So we know that. And it's very consistent for those reasons that when the market falls 80, 90 points, I'm not getting hammered in my trading account. I may even be making money depending on how my hedges are. But I tell you, my long-term account, which is always long only, it gets hit just as hard. I mean, yes, I've got a big chunk of cash, but it gets hit. I mean, we'll all lose money on days like this. But as traders, you've got to just, be active, and you've got to be understanding the market environment we're in. And you're chasing these rips up, it's not being rewarded. So if I got a big earnings report, that is good. And I'm going to go to Home Depot in a second because this is a classic example. Decent report, bounced on the initial numbers. What does it do an hour later? Gives it back. Tough environment.
Yeah, so I'll give you the Home Depot numbers, and because they were good, and actually the theme of the morning is not just good earnings, but it's also, hey, other stuff while we're at it, like buybacks and dividend raises. So Home Depot's earnings per share came in above estimates. Their sales also came in above estimates, and they raised their quarterly dividend from $1.65 a share to $1.90 a share, and they guided for sales growth for this year, sales growth and comps to be slightly positive for the year. All good stuff.
They said everything right.
Yeah.
And they rallied the stock. And in a normal market environment, you'd be like, yeah, man, that's worth that. They rallied to $16 this morning, up to 362. But let's look at the macro environment. We got a lot of issues happening here. And what do money managers do? They're like, I got a stock that's green. I'm selling it. I'm not joking. There is literally that simplicity to it. There's money managers looking to raise cash. You get a 15-point pop in your stock, and even that's not even money managers. It could be even retail. It could be a lot of things. Just looking to raise cash, get that pop, and they sell it. And here, boom, forget about the 362. It's long gone. We're now down $7, so we're 25 points off the highs. Great report. Say everything right. Terrible market environment. Don't chase longs.
We're trading below the low of the move by $6. The low of the move in Home Depot was at 343.61. That is now resistance, believe it or not, after that kind of report. I need to give you an area here of support, and it's hard, the pre-market low, whatever that is, obviously at 929 and 59 seconds. But I see an area of 3 monthly lows, and I'm just going to, and this is longer term. This is not necessarily for today, but I like I would say the 320 area. The reason, if the market continues in a volatile fashion down, you have 3 monthly lows between 316.61 and 324. The middle one is 320.28. So that's what I'm looking at. Longer term support. Now the former low of the move is resistance.
Let's go to one more, and the chat's talking about it, and everybody's talking about it. I had a Reuters reporter just call me about it. DWAC.
No, wait. All right, can we do Macy's and then DWAC? Because it's on the agenda. I got DWAC.
Okay. Sorry. I gotta look at the agenda. We'll go to Macy's.
It's okay. I got DWAC on there. I got you, Dennis.
Okay.
Don't worry. Macy's, same thing. Super strong quarter. Earnings above estimates. Sales above estimates. They also announced a $2 billion buyback and a quarterly dividend raise. That was a very slight raise. They raised it by less than a penny, but a raise is a raise is a raise. And they gave guidance for the year for their earnings per share. Actually, that was a little bit light. That's interesting. The sales guidance for the year was okay. The earnings guidance for the year was a smidge on the light side. But anyway, Macy's moving against trend this morning. Hey,
at least for now.
Yeah.
It's already leaking a bit here. I've been on the record. I like Macy's. Stock's cheap. Fits the value description. I think we got a reopening trade. I think people are going back out to the stores and doing shopping again. So, I mean, that all kind of fits the bill for a reason to buy Macy's. But we're not in the market environment that is making you money when you're buying stocks up 8-10% on an earnings report. Ahead of the report, you actually probably are selling into this. And that's what I think you're already seeing. You're seeing, people come in here this morning and they are selling back into it. I like Macy's. Would I stick it in my long-term portfolio? Maybe. I'm just not sticking anything in my long-term portfolio right now, just for the simple reason that there's so many unknowns. I'm kind of comfortable at 35% cash because I want a lot of dry powder here, and I just don't see the reason to jump in here. Every day that goes by gives me more reason not to jump in. So Macy's is the kind of stock that I would buy in my long-term portfolio if I was buying stocks in my long-term portfolio, but I'm not.
$28. I mean, if you couldn't ask for a better number than that, I mean, that was the highs back in December. That was the highs in early January. Tried there in late January, and then in the pre-market, you go to 28.10, 28.04 on another pop, trading 27.14. Man, oh man! If it get back up there the first time, that is like 9-star resistance, and the longer it takes to get back over that 28, then the better chance you got at a gap fill, and that comes in at 26.51. Oh, that's not that far away from Friday, 26.51. So there you go. That 28. When you see that many daily highs in the same area, and then you get 3 pokes at it, and the pre-market doesn't go through. That's right. 26 and a half, 28 levels in Macy's.
All right, now we can go to DWAC, and if it weren't for Russia and Putin and Ukraine, this may well be a story of the day. Alas, it is not. Even so, though, so over the weekend, the Truth Social app finally launches, and I guess color me naive. I did not realize that was worth $40, but apparently it was this morning.
More.
$50. I'm sorry, in DWAC. How high to get?
Yeah.
138 this morning.
Was it scheduled to launch?
It was scheduled to launch. I have to confess, I don't know.
I don't follow the story.
I thought it was going to launch in early March. So
Wow.
I could be wrong. It's someone in the chat, if you know, please correct me if it was supposed to launch that last weekend or I thought I knew it was coming up. I just didn't realize it was now.
It's absolutely borderline shocking.
Oh, President's Day launch. Yeah, okay. You're right.
It's almost borderline shocking that this thing could rally 70 or 80% on this morning. I mean, again, you got 4 a.m. traders that are just too excited by a story and buying hand over fist and can't stop themselves. And now, I mean, you look at it and it's given a lot of it back. I mean, we kissed $137 here this morning. We're now 97. This is in a bear market off of official bear market off of its highs, and the thing's up 15% today. So I don't even know what to say. I mean, you got to really be careful. We are not in 2020. I'm going to keep repeating myself on this show every day until people start to learn. We are not in 2020 anymore. This is not the market environment to chase something up 50, 60, 70, 80% on a hot story. So could this come back? Is this, got, some long-term, is this going to take, Trump has a huge following. There's no doubt there's going to be some people that are going to gravitate to his platform off of other social media platforms because he does have a huge following. I mean, there's a strong portion of the population that actually believes he still won the election. So, I mean, he has a strong following. And that's one thing that's going for DWAC. But I don't know how to value something like this. We're so early. We're on the first day of the launch. So it's difficult to just say, oh, yeah, I'm going to buy this thing at 100. It's going to go to 300 here today on a hot story. Hot stories are getting trampled by the overall market. Hot stories stay hot, not for days or weeks or months. They stay hot for, it seems like, minutes sometimes in this market only. And then they turn around and they hammer them again. So when you get an opportunity like that, your stock pops 50, 60% because they launched when they were supposed to launch. I mean, it's like SPCE. Remember the space when we talked about that all over again?
Yeah.
That was the high of the move when they had that launch and everybody bought it ahead of it and it was all exciting. They were buying it the next morning and then they turned around and it never came back. So I'm not saying DWAC can't come back. I'm saying I don't know how to value it, but I'm definitely not chasing a story.
And it's worth pointing out, Funware is kind of the sister stock to this PHUN.
Yeah.
So that also got to like 450 this morning. So,
take the money and run.
I guess it's probably worth acknowledging that in terms of like the longer trend on DWAC, it has
held up well.
It has held up very nicely.
Yeah.
But again, I think your first point is the right one. Where if it were 2020, then yeah, probably go ahead and buy this thing. But it's not. We're not in Kansas anymore, and these kinds of moves are not moves to that you want to be chasing. So I don't know. Obviously the move is dumb. Obviously it makes no sense for a stock to go from 80 to 138 because they'll launch an app. Is it worth something? Sure. But is it worth $50? No. So,
obviously not, because it's already given it all back.
It's down to 96 now.
They're going to talk about it. It's going to get hyped on social media. It's going to be hyped. They're talking about it on CNBC apparently right now. Richard Judge says we're watching our show, so we don't watch CNBC at this time. But I mean, this is I don't know. It's a storied SPAC. It's one of those stories.
Yeah.
It's got Trump behind it, so it's going to be more of a story than other things. It's held up very well, but I mean, it's so far not so good when, you come in and you say, wow, what a day for DWAC, up 12%.
Well,
but then you look at what it did and you're like, wow, it's given back 3/4 of the gains.
People are going to get to their computers or get on their apps and they're going to see, whoa, it's up 15% in the pre-market. Count me in. Well, technically that's true, but it's down what from the high? Like, how much is it down from the high? A lot. So yeah,
$40.
Pre-market levels are important, right? Don't just blindly look at don't just look at the net change from 4 p.m. right? Because there's a whole other world out there happening overnight at 4 a.m., 5 a.m. So anyway,
they bought the news and they are absolutely selling the news since 5:30 this morning. They have not stopped selling this news. So what happens after?
Yeah.
This is one of those stocks. It's going to be wild. I'm calling it a stock. I know it's a SPAC, whatever. We'll just call it a stock because it's going to be eventually turn into. Do we know what the ticker symbol change is going to be here?
Oh gosh, no.
I don't know if they know it yet.
I'm sure someone in the chat knows. I don't know.
Anyways, enough time on DWAC. I mean, it's got a following. It's got a story, but that story went ice cold at 5:30 this morning.
Yeah. All right. It's 8:33 here. You know what? Actually, I think we can probably move on to our guest now. I see him here backstage, Joel Kulina from Wedbush Securities. He is their head of technology, media, and telecom trading, and he always brings us really good insight. So let's get Joel Kulina on the show. Our favorite Joel.
Our favorite Joel. Joel doesn't even know what to say on that one.
We're doing good. We're trying to make sense of this. Help us make sense of the fact that the futures markets are down, but not nearly as down as everything else.
Yeah, it's funny. I think I was on your show last December 30th, so it's been an interesting start to 22 to say the least. And I think the case with Russia, and I studied economics in college, so I have no background in geopolitical. In terms of history, but I mean, it's clear that what Russia is aiming, it's really a repeat of their playbook, what they did in Georgia in the late 2000s, almost so far to the T. I think if the status quo, it's a positive for the market. Obviously Putin's recognized the separatist states. Ukraine president was out around 5 a.m. Eastern time saying that he doesn't believe a full out war is coming. So I think as of right now, the status quo and what kind of has developed.
You're talking about right now, like because there's not right now because there's not bombs flying.
There's not tanks yet. Tanks aren't rolling into Kiev quite yet,
okay.
And I don't think I don't expect that to happen. To me, and again, I'm
not at all.
And I'm not a geopolitical kind of expert by any means, but I mean, Putin's not an idiot. Clearly, if he rolled the tanks across the country, I mean, the Western allies would just kind of, obviously the repercussions would be massive. So again, we saw this with what he did in Georgia. He kind of did a little bit similar with Crimea as well. And these were definitely parts of, the Ukraine where people feel more part of Russia than Ukraine. I mean, people there, I think, already hold Russian passports. So as of right now, I think it's positive for the market, hence the move off the lows.
All right, Joel, since tech, media, telecom is your focus, we got to ask you about that right now.
Yeah.
What can you say about the tech space? It's getting every day. There's another headline. It's just another excuse to sell tech stocks. Whether it's Google doing the privacy thing that Apple did last week, hitting Facebook and all those those app-based stocks. Every day there's another headline.
Yep.
It feels like, and the market just uses, oh, this is it. I'm just going to sell my tech stocks today because that's what,
Yep.
I mean, like, what do you do here?
Yeah, I mean, I think you got to you got to do a little bit of homework. I know you guys touched on it with kind of the move in the Trump SPAC this morning. No longer can you just buy something and think that the retail army is going to continue to kind of take it higher. Fundamentals do matter. Valuation matters at the moment, and that's been the case really since kind of Powell first pivoted in late November, early December. So I think you gotta stick to that playbook. Don't overthink it. I think you mentioned Kathy Wood's interview on CNBC on Thursday, and that was scary. I mean, it was 30, 45 minutes long, and it was absolutely frightening seeing her discuss and really just kind of more evidence of a lack of investment process, lack of risk management. And I think a lot of stocks that are in your portfolio, I think your viewers should be aware of what these names are, and these things aren't going to see a V-shaped recovery. We've already crashed. And I think it's going to look more like an L and just kind of bounce on the bottom. So I wouldn't be looking at names like Roku, Teladoc, Path, Skills, like these lower quality growth companies that clearly benefited from massive stimulus and because of all central bank policy, multiples surged and those major tailwinds have been in reverse now for quite some time. So avoid kind of names further out in the risk curve. And within tech, there's still some great themes, whether it's IT services, and that's a theme on digital transformation. So that's Infosys, Accenture. Everyone knows who that is. Look at AMD. I know the stock actually saw an upgrade this morning from a long-time bear. A very simple story, 31% off its highs. They continue to benefit from market share gains at Intel's expense. They still have earnings power in the model. And it's still, probably, one of the best management teams in all of tech with Lisa Su at the top. So you look for stories like that have had really good pullbacks, but the fundamental narrative really hasn't changed at all.
Joel, when you say lower quality names, how do you quantify that?
Well, I think, maybe go back to, from the, pandemic. So almost coming on 2 years now to the day. And it is, I honestly look at daily multiple times. I scroll through Kathy Wood's holdings and you just kind of got to scratch your head. Like how, names like say DocuSign, she bought it on the blew up in November. And I think at around 145, I think last I saw stock was trading around 110, 115, Zoom Media, where valuations still aren't cheap. So it's kind of those names where they benefited so massively from COVID, essentially, demand that was accelerated at the forefront. They were able to reduce spending. And then because of the central bank policy, multiples just skyrocketed. So it's like the story stocks, like those big retail heavy names, the meme names that outperformed, in a different lifetime. I would just avoid a lot of those names and try to just, find your way back into quality, whether it's, like I said earlier, kind of AMD and semis, or Marvell's a big play on 5G and cloud infrastructure, cloud security theme. We know Russia's that's one of their major tactics. Not only when they're about to go and kind of push in other countries, but that's what they're known for, is launching cyber attacks. So Palo Alto reports this week, expect a very bullish report. They've had some success with some product upgrades. They've shown the ability to hike prices as well. And then kind of down the food chain, names like SailPoint, Qualys, also kind of just other cybersecurity plays, which is a theme which isn't going to go away anytime soon.
I mean, it sounds like that's where you're focused on, is chips and cyber. Are there other pockets of tech, media, telecom that you do like right now?
To be honest, not really.
Okay.
I know you touched on some of the the privacy changes implemented by obviously Apple over the summer, and then Google and their Android, they implement similar privacy regulations and standards as well. Names like Snapchat, Pinterest, they look mighty attractive, just given what the stocks have done. But I think the old saying, buyers are higher. And especially talking to my institutional clients, that's the sense I get from a lot of people. They rather, not too many people have the fear of missing out on, say, the first 10, 15%. But guys want to be buying those stocks when they start heading in the right direction. Because again, if a name like Pins or Snap is 10 to 15% higher from where we are right now, there's likely a reason. And whether that's a change in tone from the Fed, or at least more visibility from Powell and kind of the path that they're thinking about taking for the next kind of 4 to 6 quarters. I think that is very critical for the market and tech especially. again, because tech benefited the most because of the accommodative policy, because of COVID, because of the shift in demand, and hence they're suffering the most as a result. So people are waiting for a reason to buy these companies again. But right now, you're just catching a falling knife. And that's gotten you nowhere other than kind of, cuts across your hand over the past few months.
Joel, what turns this market around? I mean, we've got a Fed that has obviously indicated that they are moving to a tightening. It looks like we're going to get multiple rate increases here. We have the potential for war over in the Ukraine. And then you've got a market where, to your point, is everybody's scared to be the first one to buy.
Yep.
What actually starts turning it around? Like, how do we bottom? What's the process to get a bottom here and then get a market where this is okay? All of a sudden, we're starting to make money again.
Well, I think the odd thing that I've noticed is, especially last week, all those big down days we've had, volumes were extremely low. I can't really remember a time where I saw that when he had crash. I mean, can't say crash, but there were some violent days that we've seen of late. And where you look at my screen in tech, and there's probably 15 to 20 names down at least 10%. So pretty violent day. And yet NASDAQ volumes are running 15, 20% below the 20-day average. That's not really normal. So it's not reflective of pure capitulation. But obviously I think, maybe people, there's a little bit more cash on the sidelines as well. And it's reflective of kind of the deer in the headlights out there and utter lack of conviction. So what does the bottoming process look like in 22? I'm not sure. I think, again, you really need to see probably a move to the downside on heavy volume, and then kind of to turn it. You need to see some shift in the narrative, and I think that needs to come from the Fed. And it's clear that the message from the White House towards the Fed has been, we want to make sure we control inflation for Main Street, not Wall Street. Well, I mean, I think you could see a shift in that narrative to some degree. And again, if it's just Jay Powell being a little bit more transparent, maybe some of these Fed members stop speaking, randomly throughout the course of the week, wherever they may be getting paid. And I know Bullard kind of hasn't been doing the market any favors as well with his more hawkish kind of midweek comments as well. So to me, it probably needs to come to the Fed. Earnings seasons, in my view, hasn't been a disaster, but it has, if that makes any sense. We know that the multi-quarter cycle of upward revisions has come to a halt, and it's led to obviously severe multiple compression. So what you do need, though, I think, is more visibility from the Fed, and then really just kind of wait and see, and hopefully there's no more major geopolitical events that shake investor confidence even further than it already is.
We're on the line with Joel Kulina from Wedbush Securities, covering the media and telecom industry. Joel, obviously from your perch at Wedbush and all the other, Wall Street analysts, you're always looking at things to buy, right? Like where's the strength? What's going to cover? But I think we all know that, like, when we go into a bear market, if we're already in one, who knows? They hit everything, right? I mean, like, okay, banks are safe. Interest rates are going up. All right, J.P. Morgan's gotten absolutely slaughtered since its report. Bank of America.
Yeah.
Where's the point where you kind of like, is there a point in the S&P? Is there a point in the NASDAQ? Is there a point? Because when they start hitting everything, they start hitting everything. Do you have a point? Like, for me, I have a very definite level that I'm looking at today. And the low close for the year has been 43.17 and a quarter. Okay. And that was after I created. So to me, a close under that, and I'm really getting bearish. I was getting bearish last week, but what's the trigger point for you where they're just going to hit everything?
Yeah, well, that's, I mean, you hit the nail on the head earlier. I mean, that's what people are looking at, the lows from January. A lot of people didn't think we'd see these levels, and here we are. It didn't take too long to get back down there. Yeah, I think you need to close above those lows to become a lot more constructive in the near term. And again, if we do close below, it's kind of, keep that hard head on and get defensive. So within tech, look at Oracle. Oracle last quarter, going back, I think they reported pregnant part either November, December. But again, it was an inflection type of quarter. I think that re-rating story can continue with Oracle. Stock was up almost 60% last year. Massive outperformer. I think that story's got momentum. Cisco, here they are. They have a security component to the business. I think they're a big winner from a hybrid working environment with, obviously work from home and return to the office. They're
also value stocks.
Yeah, exactly.
Yeah.
So, I mean, obviously we know the gap between value and growth, I think, is the largest it's been since 95. And there's really, at the moment, with that, that's how this year started. With that gap just blew out aggressively to start. And as we sit here today, there's no reason to think we're going to see mean reversion quite yet. So I think valuation does matter. And until the tape tells you something different, then it can go out a little bit further. I mean, if I was to go out further on the risk curve, I'm probably looking at names like Unity, which again has a great management team. I think they who knows what the metaverse is going to look like, but they're obviously going to be a big part of that. They're obviously a big tool provider for gaming engines. So that's kind of, I think, stick with stories you like, or even like a name like Sony, right? So Sony, they have multiple businesses that are doing very well. Image sensors within semiconductors. They have a music publishing unit as well, and then they obviously have the gaming portion. And they also announced a deal for Bungie not long ago to kind of bolster their first party content in their battle versus Microsoft in the console war. So you just want to find stories that are somewhat isolated from all the noise that's going out around. And that's obviously in tech. The heart of it is the story stocks, the Cathie Wood stocks, and even names like PayPal, which blew up, Facebook. I mean, Facebook, I know it's cheap, but it's probably going to bounce around these levels for a while. And again, if Facebook gets going, there's going to be a catalyst where you can buy it probably up 7-8% and don't have to be fearful of missing the move. And I think that's the key for me. Don't try to be a hero, because this market's just been punishing for anyone who's tried to trade that way for the last really almost 3 months now.
Well, anybody that's trying to buy these dip on these earnings stocks, I mean, Facebook and PayPal, to your point, these stocks are down significantly from the gap downs when they reported. And, we saw the same thing with Roblox last week as well. It reported disappointing earnings, gaps down $10. And, some people are saying, oh, what a great opportunity. Now it's down another $10.
Yeah.
And it's 3 days later. It seems like when they report and they disappoint, they keep hammering them. So we still have not seen PayPal turn around here. I look at it and think, okay, well, this is the cheapest valuation it's traded at in probably a long, long time.
Yeah.
But what's the reason to be the hero and be the first person to jump in when it goes down every day?
Yeah, I mean, the move is so magnificent off its highs.
It's unbelievable.
I like to think that when you do whether it's a key upgrade or a shift in the thesis, maybe they come out and make some comments regarding kind of where they are with their eBay relationship and how that's progressing. Obviously, that's been a major headwind for the story as well. Competition's been an issue. Reopening, choppy, recoveries also weighed on the stock. So maybe we get some headlines that kind of change that narrative a little bit with a name like PayPal. Obviously, I think Facebook was one of my top shorts coming into this year, just more on fundamentals. And I didn't think IDFA issues were going to worsen to the point where they are. Yeah. And I think Zuckerberg's got to figure something out with a name like Facebook. Changing your name to Metaverse, which is still a concept in his little, side, kind of a toy project is pretty sad. And I think that's where a lot of the punishment's coming from, the institutional side of it. So yeah, I don't think you want to be chasing those names. I think if the market's going to turn, you got to ask yourself, look at the companies that reported great earnings, whether it's Microsoft, Alphabet. They're going to rip. I think those are the names. Stick with quality. I'm staying to that playbook, and kind of it's been what I've kind of trying to follow the past 3 or 4 months. But yeah, like Roblox is a good example. I know probably a lot of your audience members are playing in that aggressively, and it's just, man, I know what it hit 140 last November.
And now we're 48.
The most violent squeezes I can remember. And keep in mind, I mean, besides all the negative stories we're starting to come up about just what the hell's going on their platform, it's pretty disturbing. But the bear thesis was fairly simple. The story was going to decelerate. Users were going to, user metrics were decelerating.
Right.
And their key demographic, is like 9 to 15-year-olds, something around those
kids are going back to school. They're not like gaming all
exactly.
day. Right.
And then China was a big part of their growth story as well. So we know what China is. Obviously, Beijing, I think they announced their strict measures last August. Yet somehow this stock managed to have that move higher, despite the fundamental story and growth story not being as strong as it was, say 6 months ago.
Yeah.
And so that's obviously crashing back to earth. And then Metaverse is still probably no one knows what that's going to look like. So again, the retail got smoked in the Metaverse trade as well. So probably too early to go back in there.
All right, Joel Kulina, head of technology, media telecom trading at Wedbush Securities. Joel, it is always a pleasure. Thanks for coming on today.
Yeah, thanks, guys.
All righty. All right. A lot we have still not covered on the show. We want to devote the next 9 or so minutes to some ticker time.
Sure.
If you have tickers for us, drop them into the chat. I just saw, RJ mentioned Sony. Sony was one that Joel had just mentioned as being a name that he liked. But Joel,
You were talking about buying that one too, Spencer. Did you ever pull the trigger on Sony?
No, I never did.
I think you got a big level.
Never pulled the Sony trigger.
It's a big level. 102 was the low, 102.91. You're below it right now, trading 101.81. But you're at a big level in Sony. I don't. What's the P on this thing?
Reasonable. I mean, it's Sony, right?
It's not crazy.
SONY PE of 16, forward PE 16. So yeah, nice.
I mean, these are the kind. I think he's right. I think you're going to quality names. I think this is a name that if I was buying stocks today, this is a name I would jump in. Again, though, when I'm just looking at it, it's a stock making a new low on the move. I don't like owning stocks making new lows of the move. So is there support at $100 psychological? Maybe. But, it seems like it bounced there once and then, eventually takes it out and then things go lower. So, I'd put it on my shopping list, but I'm just not ready to go shopping yet.
Not ready to go to the store.
No.
I mean, with stocks like this, or really any stock for that matter, yeah, you could take a shot here. And if you're looking, okay, I'm gonna buy 102, but like, don't fall. I mean, you got to give yourself some room on it. But the only really way you're going to catch some of these trades, if and when they're going to turn, it's probably going to be, and I'm not saying adding to a loser, but I'm saying taking a stab. Okay, that didn't work out. Okay, I'll take a stab again. That didn't work out. So then eventually, if it turns, but that's the thing is that just the mentality, and that's when I get a little bit nervous, is that even the mentality with Joel and everyone that we're talking is that, okay, we got to find a bottom. Okay, we're going to go back up to all-time highs. There's going to be a rally, and that that may be the case, but I think you got to look at things as like, well, maybe we're not going back to 4,800 in the S&Ps for 15 years. I mean, there's a lot of of different factors.
I hope it's going to be back to 4,800 before 15 years. But...
Oh, well, you see, even you guys. I mean, does market have to do that? Does it have to keep going on?
Of course not. But we went from being...
Well, it kind of does for all the pension funds and everything, though. If it doesn't, we got trouble.
We went from being uncertain about today to we're not coming back for 15 years.
Well, I don't, but do you just hear like, oh yeah, well, here we are on a day. Buy that. Why don't we just like get out while you can? We're going to 3,500. I mean,
oh boy.
Who knows? Yeah. There's a war. Interest rates are going to 42%. There's inflation. Then after, what's going to happen? The Fed's going to raise rates too much, and we're going to go into a recession.
I have no idea what's going to happen. I don't know, and that's why I'm kind of got some dry powder, doing some day trading. That's pretty much it. Just buy dips, sell rips, do some.
I would just love
great day trading environment.
Everything, yeah.
Great day trading environment. I mean, for you day traders out there, just think about even the overnight traders. I mean, what a wicked rally! How far are we off the low? We're 100 points off the low.
Yeah, 90
points off the lows. I mean, there is a wicked trading environment here. So there's opportunities all over the place for the day traders. The day traders are cleaning up. Like, I mean, if you're at least, if you're fading moves, not saying if you're chasing, you're not, but if you're fading moves, you are making money in 2022.
So like, what about for AV Steel? What about like Chevron here, CVX, which is up this morning? Oil is up. So,
well, and here's the problem though, is this is all up and this can continue. But I mean, we're very dependent on you want headline trades. Oil is completely driven by headlines from the Ukraine. So if you're scared of headlines, you can't be touching any of this stuff. And at this point in time, I feel like the stuff wants to roll over. I feel like oil wanted to roll over, but it's not going to be allowed to if we're going into, into an invasion, into war. So, I mean, at that point, it's so driven by headlines. It's hard to say, oh, I like the chart or it's breaking down. I mean, the technicals are meaningless here because if we get the next headline and there's an invasion, all your oil stocks are going to be up. We get the next headline and there's a little more talking, or there's a little more like looking like there's backing off, just like we had multiple headlines last week. It's going to sell off. So nothing is going to trade off headlines out of Ukraine more than oil right now.
I do want to mention we did have a deal announced this morning, an M&A deal.
What do we got?
Cummins CMI, they're acquiring Meritor, ticker MTOR, for $36.50 share. It's a cash deal, so that's going to go to around $36 or so, and that'll be that. But CMI buying MTOR. There is the deal that we had that deal announced.
It's a small deal for Cummins, I would think.
An hour ago now. Hour and a half ago. So okay.
I still give him. I still give him credit, man. Waking up on the morning, you're like, oh yeah, let's do a deal. Let's buy somebody.
Sure, why not?
I give it a thumbs up, and that we're like, oh yeah, war, inflation. No, hey, let's buy this company.
Okay, so. All right. Here's a ticker that we don't discuss normally on this show. What about DD? What about Dow DuPont? This is or not Dow DuPont, just DuPont. I don't know, whatever it's called now.
What an awful, awful, awful candle from Friday. And I'm not sure, was this earnings? I can't remember.
No,
Friday seems like an eternity ago.
It was.
No, it was not earnings.
What was
it?
It was.
They sold something.
Yeah, no, they did sell something.
I feel like they sold something. I'm starting to remember.
Yeah, they sold their mobility and materials unit for $11 billion.
I guess they were thinking they were going to sell it for 15 or something. I don't know.
That candle. So
Scary.
I'm telling you, that candle catches all these traders. This is now that you look at something like this, and I think you got to sell into the rips on this. And I know DuPont's a value stock, and you're looking at this, but that is an awful candle. So you caught all the traders that are like, this is a great headline, we're going to highs, and it went straight down all day, no relief really even. So an 84 down to 78, call that a key reversal. Joel, I mean, you take out the lows of 78.42, this actually sets up well from the short side. This is a stock that can hold up, in value in a value environment, and that's what we're in. But I don't like that candle at all.
Yeah, 77 would be your next area. Then a small gap to fill down to 76.49. So, I mean, if you think they got way overdone on Friday, then it will hold yesterday's or Friday's low. If not, you can see 77 and then the gap fill and then lower at 75. But this is one stock that hasn't. I mean, they changed their names like. Every week, like DuPont, Dow, Midland, Michigan. Did you know? Yeah, I mean, it's hard to keep track of what you own in this one, but very important to hold that low from Friday.
All right, we'll do one more. Okay, fine. We can do Shopify. On my watch list, but I am in absolutely no rush to come in here. And
it's on my watch list too. Great company. I love the company. I don't know if I love the stock. It's still not cheap, not even close to being cheap on evaluation metrics. I mean, you go from 1,700 down to 600. It sounds crazy to say that it's not cheap, but it was never cheap. It's getting to the point where I sold it originally because I thought it was overdone, and then went up another 1,000 points. So I never actually thought I was going to get my stock back, but I probably am going to rebuy Shopify at some point in time. I said on the show a few days ago, 500 was where I would probably jump in. We're 643 here now. I don't know if we're falling another 143 points, immediately, but I think if it gets low enough, this is a stock that I actually would buy on the dip.
On the month, I'm not going to help you out. I mean, 500 is 500, so I can do a little bit better than Triple D on that one. I could say 595.03, so maybe 600. But if you're looking for a short-term bounce in this one, what you got to see is, and I'm not one of these people, is that for this volume to come down a little bit. Like you got a lot of people getting out here, right? This was the big down day. You doubled volume. You had more sellers yesterday or Friday, 42 million. So, theoretically, if you can make a couple lows in the same area, the volume gets back to this 16 to 20 million area, hangs out there for a little bit, comes down. Then maybe you got the whales, use that term, out, and then you just get a little relief rally. But the monthlies, 595 is your next monthly support level.
Did also want to mention Baba. There's another headline today, another regulatory headline there in Baba. So not out of the woods in Baba yet. If you're wondering,
110 enormous support. It just keeps bouncing there. So I mean, it's worked 3 times. Maybe it works the 4th. Actually, I think you play it off the 110. And if it starts cutting out, makes a new low on the move. The low back in December was 108.70. So I would say a 110.25, just above 110, buying it, stopping yourself out under 108. Low, keeping the risk low. I know overnight if you go, it's never a low risk, especially when you're talking to Chinese stock. Yeah. But that 110 is support. I'm like that's a support level.
All right, I'm going to hop off here. I was just going to say, whether you're trading long side, short side today, and maybe you're a trader that doesn't normally use, physical stops in the market, might not be a bad idea to get some out there if you're trading the intraday, because as we can see by these headlines, if you're like a physical stop trader and it goes to an area, you're going to be like, what? So yeah, not always, but depends on your investment and trading style. Yeah. So that's it. For me, that's it. I just want to see us close above, and it's 20 handles from here, 43.17.75. That's been the low close of the year. So Joel, I'm setting a low bar. I'll check in with you guys later on.
I agree with John Lewis. All China stocks, hands off for now.
Yeah, well, there's a lot of things that are hands off. Again, it's your overall cash position here. Like, are you sitting with 100% cash? I wouldn't want to be 100% cash here either. And this is the most unpredictable market that you can trade in. Like from to knowing what the next headline's going to be, to knowing what the next move's going to be. Like, would we have thought, we'd rally 50 handles, and then sell off 150 handles and then rally all the way back again?
Yes, it's not even the headline, Dennis. It's the reaction to the headline makes no sense half the time.
No, I know. So you've just got to put yourself in a comfortable position that, okay, I'm comfortable here. Long-term investors, I'm comfortable being 65% stocks, 35% cash. That's where I'm at right now. I haven't moved much. I was 40% cash. I wish I was still 40% cash. That 5% that I put to work a few weeks ago, I'm down in all those stocks. Because, I put to work, I bought some one emerging market fund, but what else I bought? I bought a little bit of Square, wrong. I bought a little bit of General Motors, wrong. I bought a little bit of something else. I forget what it was. And I'm down in all those stocks.
Yeah.
So, I mean, when you're making new lows on the move, you're usually going to be down. The only one I'm still up in is, I think, Wynn, WYNN. But, I mean, it's tough.
That's been
so I wish I still actually was 40% cash right now, because then I could put that 5% probably at in the lower levels, So it's a tricky investing environment. If you're a long-term investor, it's tough right now. As a short-term trader, it's a really good market to trade.
All right, Dennis. Have a good rest of your day. We'll catch you later. Hey, I like what Justin JTV said in the chat. Can you imagine not smashing the like button? I can't even imagine not smashing that like. We appreciate all the likes. While you're at it, subscribe to our channel. Hey, if you go to our YouTube page and you see the little join button, that is our new YouTube membership program. We're offering custom emojis. There's an emoji of me. There's an emoji of AB, of Mitch, of Luke, of all of our personalities here. More to come. More exclusive perks to come. So check out the YouTube membership program on our channel. I put the link up in the chat and on screen. Guys, check out Benzinga Pro. We are offering a 25% discount right off the bat. There's the link again. Again, it's in the chat, it's in the description, and now it's on the screen too. Get 25% off our premium news and research tool that I genuinely cannot live without. It's frankly how I do my job, frankly, most days. So Benzinga Pro, pro.benzinga.com, but get 25% off with the discount code and the link that's on the screen there. Thanks to our guest, Joel Kulina. Please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. All right, I'm hopping off. We got live trading with Benzinga coming up in a couple minutes here. Ryan, Zunaid, Mitch, this stream will end. Redirect you guys right over there as soon as they start. I'm sorry we missed some takers in the chat. They'll cover as many of them as they can on our next show. So stay tuned for that. Everyone have a great rest of your day, and good luck out there.